I saw this headline on Yahoo Finance this week saying that mortgage rates were declining and that the worst of this mortgage rate cycle was behind us. Of course, I want to put in my 2 cents and look at rates as they currently stand and historically, but first, here's this month's market report. My name is Scott Dorman and I'm a real estate agent based out of the Temecula Valley. Subscribe and hit the bell to see my most recent market updates, new construction updates, and more. Starting first with the median sales price for a single-family home in the Temecula Valley, there wasn't a lot of movement month over month. $785,000 in Temecula, $709,000 in Murrieta, $597,000 in Menifee, and this month I'm adding, by popular demand, Winchester French Valley, which saw a median sales price at $588,000. Across all 4 cities, prices fluctuated less than 2% up or down, so remained relatively stable month over month. Days on market is exactly how it sounds, tells us how long homes on average are sitting on the market before going under contract. It's a great indicator for telling us how hot the market is. The fewer the days, the faster homes are selling. In Temecula, average days on market was 7, so 1 weekend of showings. In Murrieta, it was 12. In Menifee, it was 16. And in Winchester, it was 18, so about 2 weekends of showings, which is on par with what we saw last month. This means that buyers still need to move pretty quickly if they see a home that they like, and indicates a seller's edge in this market. To show that sellers are still in control despite high rates, despite high prices, nearly half of all homes that sold in the last month went for over asking price across all 4 of these cities, with the exception being Menifee, where it was closer to 40%. There's a direct correlation between homes selling quickly and for over asking price and the number of available homes, or inventory. We're sitting at just over 200 available homes in Temecula and Murrieta respectively, about 270 homes in Menifee, and 72 homes available in the Winchester French Valley area. This is right where we were at this time last year, but about half as many homes are available now compared to 2022. Lack of available inventory continues to reinforce competitiveness and high prices on the few homes that are available. It's no secret that rates are a primary culprit driving low inventory right now. According to Redfin, 89% of homeowners are locked in with rates under 6%, and 60% of homeowners are locked in with rates below 4%. In 2021, inventory was low due to homeowners' hesitancy to sell and become part of a mob of buyers driving up prices in a post-pandemic world. Now there is homeowner hesitancy to sell due to many of them being locked into low rates that they'd rather just hang on to. In April, rates were sitting around 6.8% for a 30-year fixed-rate conventional mortgage, and going into mid-May, we are sitting right at 7%. The 52-week average is 7%, showing how sticky rates have been over the last year, and it's a domino effect. Inflation impacts the federal funds rate, which impacts lenders' sentiments regarding mortgage rates. Mortgage rates impact buying power, which dictates the comfort level and ability of consumers in the real estate market to buy and sell property. Ergo, as long as stubborn inflationary pressures hold out, so will higher mortgage rates. As of mid-May, there are signs that inflation is cooling, but certainly not at the rate the Fed was hoping for. Most analysts estimate that rates will come down a bit by the end of the year, but not extensively, with predictions landing somewhere between 6% and 7% by the end of 2024. Depending on acceleration or deceleration of inflation, it's entirely likely that rates over 6% will carry deep into 2025. Pause to read through this if you'd like. So are rates dropping? Perhaps, but if they are, it's going to be a slow descent. Like home prices, they took the elevator up and will have to take the stairs down as inflation stabilizes. It's a double-edged sword for prospective homebuyers because it's expected that if rates drop into the 5s, this will unleash so much pent-up demand and a flurry of buyer activity, sending prices soaring to new highs. There is a debate in the industry about counseling buyers to purchase now rather than wait in hopes of refinancing down the road, assuming rates drop. Ultimately, the right time to buy or sell is when the time is right for you and your personal circumstances. There are pros and cons to purchasing or selling in every market, so the decision should be made without pressure and under circumstances that align well with the needs of your household. And that's this month's market report. Again, my name is Scott Dorman and I work out of the Temecula Valley. Don't forget to subscribe and hit that bell to get future updates, market reports, and new construction information. Until next time, take care, everybody.